are back, Bitcoiners. Welcome. Welcome, Darren Adams. What up? Thanks for coming out to the chat today. I believe I've seen you around before. Some goblin loser IDK. Welcome. You were on our very first stream, I remember. Awesome. Great to see you guys. Shout out to everybody on Twitch. We're gonna jump right into the Daily Dunk. We do have another live guest today. They are busy with the sick kid, so we will see if they will join us after the Daily Dunk. But first, this Daily Dunk, guys, is not the usual me, riffing, calling Vitalik names. This is a very involved Daily Dunk. We're gonna switch up the style a little bit today. So before we get into this, because it does dive deep, I want to give you guys some Bitcoin. So get your Carrot apps ready. Download the Carrot app. There's a link in the comments. In the description of the video. You can also find it on the QR code on the screen that will lead you to the App Store. Download the Carrot app or go to www.earncarrot.com. We're going to show a code on the screen, and you can redeem that code for actual Bitcoin, which you can withdraw from your Carrot app to your wallet. First stream here. Nick Sales, what's up? Nick, where are you calling in from? There's going to be a little bit of a lag, but when you let us know, I'll shout you out. What's up, Nick? Welcome to the chat. Much love to Eastside Tony. Yeah, for real. Thanks, Eastside Tony's been a trooper coming to pretty much all of our live shows, which is awesome. All right, we're gonna put that code up. Did we release the code? Have we released the Bitcoin? Not yet. We're gonna release the Bitcoin soon, guys. Get ready. All right, the Bitcoin has been released. Shout us out if you won the Bitcoin. You guys got to beat Twitch. You got to be fast. The Twitch people are always winning the Bitcoin from us. Yeah, so let's get into it. Now that we've given you all some Bitcoin, we're going to release some more throughout the show and at the end, so stay ready. But to start, we've got a long Daily Dunk. I want to hear your guys' thoughts. Get ready. We're going to be talking about Jerome Powell. We're going to be talking inflation. We're going to be talking the transitory narrative. And of course, we're going to be talking about Bitcoin. So the real reason the Federal Reserve Chair, Jerome Powell, retired the phrase transitory. So on November 30th, in a testimony before Congress, Fed Chairman Jerome Powell suggested retiring the term transitory in regards to inflation. So here is the quote where Powell retires the term. Here's a video showing Senator Pat Toomey, really big fan of Toomey. He's defended Bitcoin and he's differentiated publicly before between Bitcoin and cryptocurrencies. He's always advocating for clearer legislation and legislation definitions in regards to the two. So we're fans of Pat Toomey here on the show. So this video is Pat Toomey questioning Powell about inflation, and this is from November 30th, I believe. So here's the short video.
Thank you, Mr. Chairman. The death came to mind, all of us, of something that we know very well, and that is our Democratic colleagues could raise the debt limit all by themselves anytime they want, and there's nothing Republicans could do to stop them. The tools have been available to them all year long, and in fact, Republicans have offered to expedite the process. There is only one reason that our Democratic colleagues refuse to use reconciliation to raise the debt limit. And that is because they would have to specify the amount of debt they want to inflict on the American economy. They want to avoid accountability for this terrible spending spree they're engaged in by obfuscating and not specifying a dollar amount. I think we should be very clear about what's going on here. Mr. Powell, under the Fed's new flexible average inflation targeting, the inflation target remains at 2%, but now it's on an average over an unspecified time frame. Core PCE, the Fed's preferred inflation metric, is running about above 2% over the past 5 years, nearly 3% over the past 2 years, and 4.1% over the past year. So it's above target, it has been above target, and it's accelerating. And yet the Fed has maintained an extraordinary emergency monetary policy stance. It looks to me like this framework appears to be a weakening of the Fed's commitment to stable prices. Now, I know you believe this is transitory, but everything's transitory. Life is transitory. How long does inflation have to run above your target before the Fed decides maybe it's not so transitory?
Well, first of all, the test that we've articulated, I think, clearly has been met now. You're absolutely right. Inflation has run well above 2% for long enough that if you look back a few years, inflation averages 2%. So I think we can say that is taken. It was not the case going into this episode. It had been many years since we had inflation at 2%. So I think the word transitory has different meanings to different people. To many, it carries a sense of short-lived. We tend to use it to mean that it won't leave a permanent mark in the form of higher inflation. I think it's probably a good time to retire that word and try to explain more clearly what we mean.
So you'll notice from that video that Powell is not changing the intended nature of his inflation podcast, only that the word transitory is confusing. So Powell still views inflation as transitory, but the term has been distorted and misrepresented by the financial press and internet commentators to the extent that the Fed's messaging is no longer clear. That's a pretty big deal because the Fed's messaging is its primary monetary policy tool. The chair forms narratives months in advance using the Federal Open Market Committee minutes. And remember, we just had a Federal Open Market Committee meeting yesterday, press conferences and speeches, as well as sound bites from the Fed governors to prepare. So the constant reporting is like a mantra, repeated daily in the financial press, droned on and on into the heads of investors. So you're saying, wait, messaging is the primary tool of the Fed? Absolutely. The Fed's other monetary policy tools, like asset purchases or quantitative easing, they have little to no demonstrable effect on the global markets. Not only do we have empirical evidence in metrics like velocity lending and bond prices in the US, we also have examples like Japan, which is several years ahead of the Fed, using the exact same scripts to it's basically propaganda for the people. It is the belief in the power of the Fed's tools and the clever use of messaging that makes these other tools seem to work. So does the distinction matter? Should we care if it's the market's expectations or the actual monetary tools that cause market changes? I think it does matter. Realizing that messaging is the tool allows us to disregard unimportant metrics and filter the signal from the noise. So simply enough, if the term transitory is causing mixed signals, then the Fed will simply decide to retire the term. So next, we're going to talk about long-running global forces on interest rates. So let's go to the second quote. This one is about interest rates. Here, Senator Mike Rounds asks if Powell considers the U.S. government's creditworthiness when the Fed makes interest rate decisions. So baked into the question is a complete blind acceptance that the Fed is able to set interest rates. Round's quick follow-up showed a cognitive dissonance. He asked if Powell predicts interest rates on the US Treasuries to rise over the next 18 months. That question doesn't make sense if he believes the Fed sets interest rates. If the Fed sets interest rates and high interest rates threaten national debt, why would Powell set rates higher? I realize this might be a touchy subject for many who have bought into the power of the Fed to set interest rates, but Powell's answer should make you at least question your assumptions. So I read, quote, generally, higher interest rates is something that the staff has been forecasting ever since I got to the Fed 10 years ago, and it really hasn't happened. What happened, as the secretary mentioned, you have a series of long-running global forces that are leading to lower sustained interest rates. How long will they last? It's very hard to say, but for now, we should have a lower inflation trend. Obviously, currently, at the moment, we have high inflation, but for many years, we've had low inflation, and the markets are baking in a return to lower inflation. And that was Powell hemming and hawing and trying to avoid the high inflation narrative. But I haven't seen any analysts give the first half of this statement a second look. But that's the juicy part. So Powell plainly admitted that the Fed is not in control of interest rates. that long, quote, long running global forces, end quote, are in charge, and Fed policies only have transitory effects. So, which direction do those effects take in the market? According to some, quantitative easing is supposed to keep interest rates down. But in the midst of this round of quantitative easing, rates rose. And the start of the taper coincided with rates falling below the long term trend line. So, the idea that interest rates are outside of the Fed's control is central to the global dollar, or sometimes called the euro dollar thesis of the monetary system. The majority of the global financial system is actually outside of the USA, despite what our central nationalistic like government would have you think. So where the global capital flows actually dictate what's going on and are much closer to the objective truth of the matter. But I don't believe that anyone understands them in any meaningful way. I mean, it's far too complicated. The Federal Reserve is not central, and its traditional tools have very little effect. And that's why their messaging is so important. So, quote, long running global forces are the deflationary forces. Their main cause is debt saturation and diminishing marginal revenue product of debt. In other words, the growth you get from the next dollar in debt is approaching zero. Excuse me. So there are other less talked about and less understood causes of global low interest rate forces. Demographics is a big one. China, Japan, Europe, and Russia are facing rapidly shrinking populations. They have already passed the point of no return. Fewer people to produce and consume in the coming decade. So this results in the natural shrinking of their economies, and that is above and beyond the debt saturation mentioned above. So another force boosting demand for high quality securities is rising geopolitical risk. As geopolitical risks rise, whether that's foreign troops on your border or trade wars, investment and economic activity, those things are negatively impacted. So the more foreign troops at your border or trade wars, investment and economic activity are negatively impacted. That makes sense, right? And as the US liberal trade order ends, borders will become less certain. Risks of regional war increase, and legitimacy of international institutions like the United Nations, the World Trade Organization, the World Health Organization, the World Court, the North Atlantic Treaty Organization, the International Monetary Fund, right? All of these sort of centralized tentacles that we just pump money into as a means of fighting off entropy, they all become undermined. And if you simply want to defund all of these organizations, just exit the US dollar and buy Bitcoin. Simple as that, folks. A global low interest rate environment means that there is a high demand for safety relative to other uses for that capital elsewhere in the economy. So opportunities dwindle and rates drop. To answer Powell's question, how long will they last? Until we replace the money, until Bitcoin becomes the global standard, the world reserve currency. So let's talk about supply side inflation and the taper. So let's examine a question and response from Toomey and Senator John Kennedy about inflation forecasting and the speed of the taper. So are supply side problems money printing? If not, why do we count their effects as inflation? Price rises are not an evil thing. The inflationist narrative, that rising prices are everywhere and always inflation is bothersome. Prices change all the time. Both decreases and increases are a natural phenomenon. Price increases that are a result of supply side issues are not necessarily bad. But on the same dime, I don't accept that all of these price increases that we're seeing in the USA today are due to supply chain breakdowns. And, most of these supply chain breakdowns are caused by the government's reaction to a certain disease that will here not be named. So perhaps modern technology and globalization have poisoned a couple generations to think that prices should always go down, not up. But I'll point out that even in a sound monetary system that's facing the global deflationary pressure of today, prices would increase at times. They'd probably increase faster at the current environment because sound money has a way of flushing malinvestments out faster. So that bears repeating. Sound money or Bitcoin has a way of flushing malinvestments out faster, increasing the general productivity and efficiency of the markets. Prices convey information in the market. That's all. Changing prices tell us things about the supply and the demand of certain assets. If the supply chain bottlenecks are forcing prices up, it tells market participants that capital or innovation is needed in those areas. And it adds incentive to move products or services into sectors with relatively high prices from areas with less potential for profit. Price changes due to supply side effects are hard to predict, as Powell said, and that's true. This is because the issues could be on the other side of the world, or there could be regulatory roadblocks, or any number of small things that might hinder the market from moving capital where it's most needed. Supply side problems shouldn't be viewed as inflation. They are imbalances. So it's a classification error. This highlights the deficiency in using prices as inflation. If the Fed was printing money, it could just say we printed 5% more money, so inflation is 5%. The reason it can't do that and must rely on an index, an artificially moving goalpost of an index called CPI, is exactly because it doesn't print money. Since at least former Federal Reserve Chair Alan Greenspan, Fed chairs have admitted that they don't really know what the supply of the US dollar is. So in Bitcoin, we don't have this problem. The terminal supply is capped at 21 million, right? We know there will never be more than 21 million Bitcoins. But the Fed chair, many of them have admitted that they don't know how many US dollars there are. And none of us do. So back to Powell. He said during the testimony that the Fed's purchases are accommodation, not printing. Its purchases are intended to add a special type of reserves to the banking system to encourage banks to lend, which is where money printing actually happens. If M2, M1, or base money were important metrics for the supply of money, inflation would be much more predictable. Yet since quantitative easing started back in 2009, the massive inflation that we've been warned of and talking about, it's never occurred. It never showed up. So finally, in 2021, when we get mild price increases of 5% to 6%, a full 12 years after quantitative easing, it just so happens to coincide with the worst supply chain disruption in 50 years. So here's the other interesting part of this last exchange that occurred on November 30th. And this is a quote from Jerome Powell. Quote, "We now look at an economy that is very strong and inflation pressures that are very high. That means it's appropriate for us to discuss at our next meeting, that's in a couple of weeks, whether it'd be appropriate to wrap up our purchases a few months earlier." And this is something they will have discussed yesterday, and we'll be covering that next week as well when we're back. Again, so this is an example of messaging or expectation management. Listeners go away with the impression that the economy is overheating with inflation, so much so that the Fed has started pulling back some of its powerful monetary weapons and thinks it might have to be even more aggressive. We now know that the Fed did double its rate of taper to wrap up in March 2022. What we are starting to hear is talk about a taper tantrum, where markets pull back as the Fed supposedly withdraws its stimulus. However, economic conditions have been getting worse for months now. It has very little to do with the taper. The Fed reacts to the global economy. not the other way around. In fact, that is one of the reasons the Fed has decided to taper in the first place, because the economy has been getting worse. And that wouldn't make sense if they were in full quantitative easing mode. Hence, the speed of the taper doesn't matter much. It's all about the signaling. Rates have generally declined and tightened this year. In the midst of multi-decade high inflation, what does the Fed wish to say with speeding up the taper, right? That's the question we should be asking ourselves. So the Fed is telling you, people in the United States, that their dollars are under threat of devaluation. So you should go out and spend. And we know that's a very Keynesian solution. It's the wrong answer to the problem. You don't have to go out and spend. What you should do instead is buy Bitcoin. Go out and store your wealth into anything other than the dollar or assets that are backed by the dollar. So at the same time, this convinces foreign banks that the US denominated debt burden will lessen because the Fed is worried about losing control of inflation. So foreigners should go out and borrow and lend in USD. The Fed is also hedging its bets. If recession comes, people won't lose faith in the Fed's monetary tools, but in its competence. It can handle investors thinking it made a mistake, but not that its tools don't work on a global scale. So in conclusion, the Fed and the US dollar are terrible stores of value, and they're incompetent, and you should buy a store of value and a money that is not left to governance, right? That you should buy a money that is ungovernable. You should buy Bitcoin because it's totally immune to governance. And that's it for a rather long daily dunk today, guys. I'm going to check in with the comments here real quick and see what you guys are talking about. Sure. How will this affect the market and also the Bitcoin too? All right, we covered all this, guys. So I want to go into another Bitcoin giveaway. So get ready. As usual, get the Carrot app. Get yourself ready to enter a code. There will be a QR code to download the Carrot app appearing on screen, or go to www.earncarrot.com. Sotirios Chortogianos. There's a Greek guy in the comments that says, love you. Thanks. We're happy to have you with us. Thanks for joining us if this is your first stream. It looks like someone should have won the Bitcoin this round, and I think we are going to cut to a short break, and I will be back to let you know what segment is next. So without further ado, guys, before we go to this break, make sure you buy your tickets to Bitcoin 2022. I checked the numbers, and y'all bought 9 tickets to Bitcoin 2022 so far since we've been going live. Let's see, there's 40 people on the stream. That means 1/4 of you are going to be at the conference. I hope the rest of you have your tickets. If you don't already, you get 21% off in the description to this video. Come hang out with your fellow Bitcoiners. Come hang out with me. I'll be there. Everyone on this stream that's ever been on this Bitcoin Magazine Live is going to be there. Everyone in Bitcoin is going to be there. 21% off. This is one of the last remaining discounts you'll find, and I'm going to keep this discount until my bosses take it away from me. So 21% off your Bitcoin 2022 tickets with the promo code YTMAG in the description. So go get your tickets, and without further ado, here's a short ad.
Yo, what is going on, plebs? We're going to take a break from our programming to tell you about the resurrection of our print magazine, starting with the El Salvador issue. Starting this fall, Bitcoin Magazine will be available on newsstands nationwide and at retail stores such as Barnes & Noble. Don't want to get off your couch though? No problem. You can also go to store.bitcoinmagazine.com. So skip the line and get each issue shipped directly to your front door with our annual subscription. I'm talking 4 issues a year that contain exclusive interviews and profiles with leading Bitcoiners, actionable insights on the state of the market, breaking news and cultural trends, along with powerful photos and artwork from the best artists in the world.